Welcome to the July 3rd, 2017 Advance Report for McGowanGroup Asset Management clients. We are halfway through 2017. Let's take a look at the results for an extraordinary 6 months. You can see the Dow and the S&P up between 8 and 9%. Put the dividends on top. You got a total return that's a little over 9%. An extraordinary reward for just 6 months. The NASDAQ, tech heavy and biotech heavy, up 14% so far this year. European index is up a little less than 6%, and Spain leads the way, actually, just under 13% for that index. Now, bonds. This is a big story for this year. It's just called yield compression continuing. Greece, the poster child of bankruptcy, well, they can borrow money on their 10-year treasury now at 5.3%. Looks like they'll be able to borrow all they need to at least bridge the gap. Argentina's is 6.3% despite the fact that they've defaulted at least twice during my career. And Mexico borrowing money at about 3 2/3%. You can see the U.S. 10-year there at 2.28%. And what it means for bond prices, if we look at the 20-year U.S. Treasury index, the price appreciation as yields settle back down after the election, price appreciation so far this year, about 5% for long treasuries on top of a yield of about 2.5%. So bond investors being rewarded. Here on the high yield index, last year high yield corporate bonds after the credit crisis, the markets froze about February of 2016. The high yield indexes outperformed the S&P last year. This year, about a 2% appreciation, just below 2%, plus about a 5% yield on this shorter term B-rated bond index. Longer high yield generally was appreciation commensurate with the S&P and the not quite as good as the NASDAQ, but certainly competitive with the Dow. Here we've got the emerging market bond index. It is about a 4% appreciation on top of the yield so far this year, and that's a pretty good year for bond investors so far. A lot of that is those treasury yields settling back down and the relative attraction of things that pay a decent return. Here, the U.S. technology ETF, 16% so far this year. You can see it big tech and more innovative tech like Amazon and Apple leading the way here. Now, Alex flashed a warning sign. We cover it in the long play program. This pattern right here and the NASDAQ as well, it may have indicated at least an intermediate top according to our head of trading. Now we go to the biotech. This is just an astounding 34% year-to-date return. Remember, there was a 2-year bear cycle in biotech after everybody piled in. Here's the important message right now. People are starting to chase returns. People are assuming that if the S&P is up, they should be up commensurate with the S&P. Well, maybe so, depending on a portfolio risk. But this is the phase of the market where performance chasing becomes much more dangerous. I'm Spencer McGowan, McGowan Group Asset Management, NetWorthRadio.com.